Hey guys, so welcome back to my April video, and I am sorry I'm holding the iPad up with my hands, so I am moving a little bit, but today's video is going to be on IRAs, and I wanted to get this done before the April 15th deadline because, as I'm sure a lot of you guys know, April is the time for you guys to do the taxes, and April 15th is the cutoff time. So IRAs, in case you guys don't know, is an individual retirement account. Sorry about that. It does deal with investments oftentimes, and you can choose where your money goes to and everything like that, and how you invest it or save it. But it is very important because it basically gives you money for later on when you're not working anymore, you're just too old, and you want to kind of just enjoy life. So going into it, if you're not doing taxes, this video might be a little irrelevant for you, but it's still something nice to learn because this is something you should definitely always start saving up for, because the earlier you do it, the more you'll have at the end, and the less you'll have to do at a time. I'll go further into that as I talk about the different IRAs, but there are three major IRA accounts, and that includes traditional, Roth, and SEP. I will not, though, be talking about SEP IRAs because it's not really something that most individuals encounter. But an explanation of what that is, a SEP IRA is a kind of like a company account that a small business can open up for their employees. And what happens is the business is in charge of managing the amounts in the account, and their employees can pitch in a certain amount. If they choose to, the employer can also contribute in addition to that employee's account. But at the end, let's say you stop working for that company that has a SEP IRA, the business is up to calculating how much you've earned and how much they've contributed, and the transfer rate and everything like that. So it can be very confusing. If you're looking into one of those, I definitely recommend you go into your financial institution and speak to your rep. That way they can further assist you. Now, traditional IRAs. This is traditional and Roth are the two most popular ones because they are usually generally the ones that individuals will have. When you open it, it always has to be under your social. You cannot open a joint IRA because this is an individual's retirement account. For a traditional IRA, when you put money into that account, you will be taxed at the time that you put it in. Sorry. You won't be taxed at the time that you put it in, but just like later on when you do retire and you will go to pull that money out, you will be taxed at that time. 59.5 is the cutoff time for both accounts, so after that, you're able to make withdrawals without penalty. And when I say penalty, IRA accounts, think of it as a savings account that you cannot pull out of until you can legally retire. And that's why they have that cutoff age. So you have to keep in mind and be cautious that the money that you put in there before you're 59.5, you're not going to be able to use. Now, if you do, you have to put aside taxes, but it can be quite a hefty tax. Usually it's, I think, 10 and 5, so 10% paid to federal and 5% paid to the state that you go. But this varies depending on the state as well, so you do have to look into how much your state taxes you for taking out money from your retirement early. For me, it wasn't too bad. I have accidentally taken out money from a traditional IRA before. The IRA it was like $170 and it was taxed about like $35. So it isn't too much, but I mean, that was a small check. If you kind of multiply that, you're paying a lot just to get your own money back. So do definitely be careful with those. On top of a traditional IRA, it does have cutoffs. After certain ages, you're not able to make contributions, which means you're not able to put money in anymore. Regardless of the type of IRA, you always have to have some type of legal income, which means you have to be working and earning a paycheck to be able to maintain and open the account. Other than that, there isn't much that is very different. The Roth IRA is more unique because a Roth IRA, you are taxed at the time that you put in money, but you are not taxed when you take it out. So right now, I actually do have a Roth IRA of my own, and with that account, I prefer it because right now my tax bracket is not a very high one, and this is all plays on the tax bracket that you work in. A tax bracket is the amount of money you earn per year and how much you're taxed for it. So for example, let's say you're a doctor right now. Doctors obviously are going to be making a lot of money. And if you have a Roth IRA, you're going to be paying a lot of money to put money into your retirement account. So I would say, you know, as if I were a doctor, which I'm not, I would put the money into a traditional, because when I go and retire, I'm not going to be making as much as I was while I'm actively practicing, which means I am not going to have to pay as much money in taxes when I go to take out my money. As opposed to me, I currently have a simple job, and I am not in a very high tax bracket, so for me to pay taxes on what I put in right now is very much worth it. And later on when I go to pull it out, I don't know if I'll be making more or less or the same, but regardless, I'll at least be able to take it out tax-free. The other benefits of a Roth IRA is that you can actually take out up to $10,000 for a first-time home purchase. So this is extremely beneficial for all of you guys who are young and who have never purchased a home. And this is, you won't get penalized for this or anything like that, which is an amazing thing. Another difference is with Roth IRAs is that you can actually make contributions even after the cutoff age, as opposed to a traditional where you are not able to anymore. Other than that, those are the biggest things. The 4 contributions, it is the same for both types of IRA accounts. If you are under 59 and a half, you can contribute up to $5,500 per year. If you are over that amount, they have what's called a catch-up contribution, and you can do up to $6,500 if you're over that age. But for traditional, it is cut off, I think, at 70 years old. The other, I guess, unique thing about these is that there are different types of IRA accounts too. So just like how you can have a savings, a money market, and a CD or certificate of deposit account, you can have these in the form of an IRA. But do be cautious. If you take out, let's say you have an IRA that is also a CD account and you're not 59 and a half, and suddenly you need that money, you are going to be taxed for income, federal and state. Plus, you're going to be penalized for taking out of a CD early. Plus, you're going to be penalized for just not being old enough to take out the money yet. So you really, really have to be careful when you're putting money into these accounts. Now, the difference that it can make, I'm currently 23 years old. I started saving for my IRA when I was about 21. So it is quite a young age. And because of that, I'm able to make smaller contributions because I know I have a good minimum of like 36 years, I think it was, before I retire. And even after that, I might not retire that early. So I'm going to have a very long time, as opposed to someone who is older. You're not going to have as much, which is where those catch-up contributions will play a huge role. And the difference can make hundreds of thousands of dollars. And 401ks, if you guys are wondering, it is very much the same thing, but your employer is going to be making a contribution to that usually, and which is amazing because some employers will match up to 3%, which means you can be doubling the money you're putting in per paycheck. And by the time you retire, you'll have so much money, and it's free money that you're getting later on. So it is very beneficial. Those are the basics of IRA accounts. I hope that is helpful for you guys. If you guys feel I left anything out or maybe have further questions, please feel free to message me or comment on this video. Thanks so much for watching, and I will definitely try to make more videos more often. And have a great day from here in really burning hot Southern California. Bye.